Hello, welcome back to another video. For those of you who don't know me, my name's Jared, and today we are in Fidelity, and I want to kind of give a little bit of a tutorial how you check the income statements, the earnings, all that kind of stuff with some of the stocks that I currently actively own. As you can see, I actually have that list pulled up right now, so that way you can all see that I own the companies that I'm currently talking about. Yes, my portfolio is actively down currently. There's reasons for that, and I am not showing my call options. And I like to pull profits. So I'm up significantly from my initial investment. I'm sitting around about $110,000 portfolio, which is great. But it's all invested, and we're looking for additional growth. With that being said, you can see that actually some of these information technology software is up a little bit today, mostly. Not all of it. You can see Alloy down here and Qubits, D-Wave. They are down today so far, but there's still a little bit of time left in the day. If you enjoyed the video, smash the like button, and we're going to get right into it. So, as you can see, all the individual stocks that I own: ServiceNow, Adobe, Salesforce. Most of these are going to be those subscription based SaaS companies that are doing really awesome today so far. I anticipate they're going to do a lot better. I do actually have one of them pulled up to take a look at a chart. And then I got some consumer staples: Elf Beauty, Celsius. And then down here you got Honest, which is going to be makeup, things along those lines, skincare, yada yada. I got Meta, Nike, PayPal, Plug Power, SoFi, Honest, Amazon, Alloy, AMD. I still have some of my 10 shares remaining of AMD. AMD is doing exactly pretty much what I anticipated it to do. If you want to go back and watch my previous video on what I anticipate, but I'm going to discuss it up here again towards the end of this video. SMCI, Rigetti, D-Wave, and IonQ. That are my current holdings of actual shares. I do have a bunch of call options going on. Very low risk, low cost options. Hard to say that options is low risk. But when I'm talking about that, they're all in good, verifiable companies that I actually anticipate are going to do well. And they're all call options. I don't have any puts. I'm not betting against the market. I think betting against the market, you're going to lose more often than you win unless you're just hedging your portfolio. We're going to get into the chart for Meta. Meta is holding really good resistance right around this 613.68. We keep bouncing above and back down, so we're stomping out some of those sellers in there, I believe, and we're going to spring back to the upside. I would anticipate us going back up to about that 640 this coming up week. Meta's got a lot of room to grow in this market, and they're putting up numbers and earnings to back it. I anticipate within the next couple of years they'll be over $1,000. That's why I own some of Meta. Now, when I was talking about Fidelity, you can go over to dividends and earnings. That's a great tab to go to. You can see their EPS, their PE. You can see their PE is 22.48. That's below their 5-year average. And their earnings per share growth, that's year over year. And then this is the last quarter, or the same quarter last year to this year. With that being said, last 12 months ago when they reported earnings for that same quarter, they're up 62.36% on earnings, which is good to see. And then they do have some more additional info. They're reporting earnings again July 28th, 2026. They just completely destroyed their earnings per share, which was good. And then this is where you actually want to go, which is statistics. Statistics tells you a lot more. You got market cap, the PE, once again. It compares it to the industry average, EPS growth, trailing 12 months, last 5 years, gross margin, EBITDA margin, all the stuff that you need to really be looking at. But right here, financial statements, that's where you click, and that's how you get to the balance sheet, income statement, and cash flow statement. I like looking at the income statement. Back here, you got quarter one of a year ago to quarter one, which is their latest earnings. That's where you get the 62%, 68%, whatever it was. And you need to compare the same quarter year to year. And the reason being is throughout the year, certain cycles happen in the market. So, Christmas time, obviously, consumer staples and consumer based products are going to do really well. Amazon's going to report way higher earnings up until Christmas because everybody uses Amazon. Walmart, they're going to do well around Christmas time compared to other quarters throughout the year. So that's why you look at it as a annual, year to year, and then same quarter previous year, which obviously this quarter Meta was up pretty significantly over 12 months ago when they reported the earnings. And then I like looking at the net income. Net income, and of course, this is in millions. So that's $16,644 million. And then earnings per share, and then diluted earnings per share. You can swap it over to annual, and then that tells you what it was 2025 to 2024. You're not going to be able to see 2026 until the end of the year. It just kind of gives you a reference as to if they're increasing their growth. Obviously, from 2021 to 2022, which was a great time for most people to buy, a lot of these companies, they actually reported less sales, way less income, but now they're eclipsing again. So they did go down last year a little bit, but you had tariffs, you had a lot going on that it just caused prices to sink. Black swan events always directly affect the market. With that being said, I do actually still see Meta as a buy all in all, and mostly because I do anticipate it going to $1,000 stock. I think by the end of next week, we're going to be back in the 630s, 640s. Hopefully, we jump back up above that 645 mark, and then that breaks us free. Once we break through that, we're going to break free. We've already had some of the sells right in here, so we're offloading the amount of people wanting to sell off their shares. And then we're going to continue up to the higher side. I'm still holding on for Meta to become $1,000 a share, and then I will start looking at pulling some of my profits. We're going to move right along into SoFi now, and we're going to go through SoFi the exact same way as we did Meta, and then we're probably just going to look at the charts for Salesforce and AMD. Looking at the chart for SoFi, we are doing the same thing as Meta. We're hugging this resistance line at 1587. We're bouncing above, below, above, below, above, and below. We do have some downward momentum, so we're selling more than we're buying, which is fine. It's a great opportunity for those of us that are looking for good value in a stock. And buying SoFi at $15, $16, I don't think we're going to get a better opportunity by much if we ever do on SoFi again. I think we're going to bounce back over 20. And once we're back above 20, it's going to be very rare that we drop back below 20. So buy while you can. Pretty much where I'm going with that. You can see on April 29th, they reported earnings, and they actually had a meet expectations, which is absolutely fine. Their meet or beat is exactly what we're looking for. They got earnings coming out in July 27th, and earnings per share. Their PE is 36.41. Don't have 5-year average yet, which is fine. The 5-year industrial average is 34.42. You can kind of use that as a reference from where the current PE for trailing 12 months is. Their growth quarter to quarter the same year, 100%. That's awesome to see. They're definitely growing. They're making record breaking membership, and they're only going to keep growing their earnings from that point. That being said, you can kind of see in here the gross margin is very high percent, 70%. That's awesome to see. 20% EBITDA. That's fantastic. I'm excited to see what SoFi can actually do. Now, quarter to quarter, we're comparing once again on income statement. They increased their sales quite heavily. They've actually increased their sales every quarter that they've reported since last year. And they increased their net income substantially from a year prior. They did not increase their net income from the previous quarter, but there is reasons for that. They, pre-tax or paying taxes, interest on goods, operating income after depreciation. Their depreciation went up. Operating income before depreciation was higher. Pre-tax income expense was higher. So there is reasons why you end up going from a higher gross profit to a lower net income. And sometimes it's a one-off, sometimes it's a huge one-off one way or the other. We're going to switch it over to annual here. And they've increased sales, turnover pretty much every single year. And they are still beating gross profit. That's important to look at. Operating income, important to look at. You can see back here 3-4 years ago they were negative. And then net income, all in all, they actually did still beat on their last year for 2025 compared to 2024, which is awesome to see. I think they're going to continue growing, and I think on the next earnings report it's going to be a different story. They're not going to go down, they're going to go up. And I anticipate once they're back above $20, it's going to be very hard for them to drop back below. Are they going to go back to 32? I hope so. I do anticipate that they're going to end up being a $30 to $40 stock all in all. And that's when I'm going to be looking at pulling some profit. But we need to get there in order for me to make that decision, right? Please do your own research, and that's exactly the point of this video, is to show you how to start doing some of your own research. Salesforce has been making some cooperations and partnerships, and I think they're going to do just fine for themselves in this next earnings. And you can see we're hugging this bottom resistance at 165.77. And we kind of are bouncing right off of that with upward momentum. We're starting to buy more than sell. We have more buying pressure than selling, which is good to see. Hopefully it can continue. I think that we are going to see a little bit more pain, but when they start reporting earnings, which they report earnings May 27th, which is 12 days from today, I'm anticipating that they're going to report strong earnings. It will be interesting to see what their future guidance is. But CRM to me is still a strong buy. I have a lot in my portfolio for them already, and I anticipate they're going to continue doing well. And I think they're going to be one of the first SaaS companies to bounce back. AMD, we're going to take a look at chart here. Nothing's really changed since my last video on AMD, outside of the price came back down, which is absolutely fine. It happens. Nothing goes straight directly uphill. forever. You got to have your ups and your downs, and there's always going to be selling pressure from those of us pulling profit and funds prioritizing their funds and resetting. So selling AMD to buy something else, selling Nvidia to buy something else. They don't want to be too heavily weighted one way or the other. So they are going to sell some of their profits, rebalance their fund, and go from there. Where is AMD going from here? I anticipate this is going to be a short downhill slope followed by an additional rally. They got the 450 series coming out. I think Nvidia took a little bit of the wind out of their sails, which is fine. Nvidia is also a great company. They are over specking, essentially making their chips currently manufacturing better than what they said they were going to be. And they just released that news. I think that has something to do with here. And Trump just went to China and they were wheeling and dealing over there. So we'll see where that all follows through if we end up getting some China help with the Strait and things along those lines. Hopefully, we see end to all of it shorter than later. But AMD. In my previous video, I spoke about how I had 30 shares total going into the run. I set a stop loss at 412.75. It went up to when it went up to about 430. I ended up getting stop loss out of those 10 shares. That's fine. I still made a ton of profit. If we drop back down below 400, I was going to buy again. We only dropped down to about 408. I didn't have the opportunity to buy back in where it made sense to me. Now, with that being said, we have a resistance up here at this 458.79. We've met it a few times now. And we are gonna end up having less sellers than buyers at this point, in my opinion. Will we still have some selling pressure? Could we come back down to this 395.04? Absolutely. I did also sell off 10 additional shares at 450, and that was me pulling profits that I wanted to pull. With that being said, I still own 30% of my bag, or 33.3 repeating percent of my bag, which is exactly what I want to teach on this channel, is to make sure that when you do have these runs and you believe they're going to keep going up, but you're at a really good spot to pull some profits, make sure you're pulling some of those cards off the table. Now, yes, there's going to be plenty of YouTubers out there who are going to disagree with that statement wholeheartedly, and because they were in Palantir when it was $6, and even at 130 they still made incredible profits. But if they would have sold a little bit at that $200 mark, right around in there, 180 to 200, they would have actually walked away with a little more profits, and they even could have bought back in. Will AMD stay above 400? I believe so. I don't actually, when we jumped up to 430 in one, or back in this range, I got a chart right here to be able to talk about it. So we hopped up this gap up. So we went from 350 to 400 pretty much at the start of the day. This was the opportunity where we could have broke back down below 400. We ended up surging even higher. We broke into those all-time highs. We continued to the upside. And right up here is where we hit the resistance. Can we drop back down to this resistance? Yes, but you're going to have a lot of people swooping back in to buy. That's going to cause us to go back to the upside. That's why I don't know if we'll actually see a 400. If we see a 400 AMD, I'm probably going to be buying back in those 10 shares that I sold out of. And I will keep the, what I guess it'd be $10.50, so $500 profit, and then still own the same amount of shares that I had. Well, technically, I guess I would only buy back in on 10. Either way, you can use the 412.75 that I sold or the 450 that I sold. That's only if we drop to the downside. Now, the only reason why I buy 10 is because if we continue dropping, I want to continue buying in and actually be able to own more AMD than at the start of the run. I don't think the run's over. They still got the 450 series coming later this year. They are going to have impeccable profits, growth. They are going to be essentially what NVIDIA was. They have a few more years to be able to run before they start getting to the point that NVIDIA is at. That 60% growth is huge for NVIDIA, but it's not the 80% or the 70% that they're putting up. AMD still has plenty of room for that 70% growth. And that's exactly at the point that they're at that point right now. With that being said, AMD I am a hold on and then possibly buy if we go to the downside. If we continue up and we break above 500, I'm probably going to be looking at selling additional shares. The risk to reward on it, I don't know if I see it as $1,000 stock in this run. So at $500, I've already doubled, tripled my money. I'm going to be looking at selling off and pulling more profit. In which case, if we end up surging to the downside, I would buy back in. I do believe in AMD. They have a lot of growth. A lot of people are going to be telling you need to own it right now. I hope that you bought it all back in here. You had all of this as an opportunity to purchase AMD and make your huge amount of profits this week. Well, the last couple of weeks. So with that being said, if you watch the whole video, smash the like button for me. Share it with a friend. It means a lot. And thank you for watching. See you in the next one.